Hey guys, Cheryl Capelli here with the Family Mortgage Team, and we're going to have a little bit of a longer mortgage minute today, but we're going to talk a little bit about the credit basics and the rules to the credit scoring game. So give me just a minute, and I'm going to switch screens so you can see my fancy dancy PowerPoint, and we'll go over the credit basics and the rules to the credit scoring game. All right. So credit basics and the rules to the credit scoring game. Trust me, credit is a lot easier if you know all the rules. Technical difficulties. There we go. There are 5 components to your credit scoring, and your credit inquiries, and this is the one that everyone asks me about, and you hear a lot about this, but credit inquiries are only 10% of your score. So yes, it does negatively impact it, but not as much as other things. So of course, the biggest component to your credit score is making your payments on time, and that is 35% of your credit score. Your utilization ratio is 30%. Time length of credit is 15%. Types of credit is 10%. And then, of course, that credit inquiries is 10% as well. So let's go through these one by one. Timely payments, 35% of your overall credit score. Late is only late 30 days after the due date. So you will not be reported to the credit reporting agencies as being late if your payment is due on the 1st and you make a payment on the 20th. You will likely be assessed a late fee, but you will not be reported to the credit reported agencies that you are late until you are 30 days late. So the more recent the late payment, the more it hurts you, and making a late payment could drop your score up to 100 points. I have a real personal story about that really quickly. Back in 2009, when Steve and I were going to purchase our home, he and I had both been in divorces, so we had a little bit of credit challenges, and we had worked on it. We got it finally to the point where we wanted it to be to get the best rate. And somewhere during that time, I went to Kohl's, went to treat myself or something. And of course, you know how they do. Hey, if you use your Kohl's credit card, we'll give you 30% off today. And I said, sure, that's great. I'd love to save another 30%. However, when it came to time to pay the bill, I forgot, because it wasn't in my normal routine. So I paid it 32 days late, and I paid the $27 off. However, it impacted my score by 104 points. So when I tell you it truly does drop it by 100 points, or up to 100 points, it happened to me. I know it happens. All right, your utilization ratio, this, just by way of explanation, is the amount of credit that you're using versus the amount of credit you have available. And this only pertains to cards that have a credit limit. So it doesn't pertain to, say, an auto loan or student loans or anything like that, just to cards that have a credit limit. And this does make up 30% of your score. Ideally, you want to never have greater than 25% of your available credit. And the more that you exceed that threshold, the more it negatively impacts your score. Now, the good news is this is only calculated at the monthly statement ending date, which means that, say you're a business owner and you use your credit card for everything and you max it out all the time, as long as you pay that payment before the statement ending date, it will report to the credit reporting agencies that you have 10% or 25% of your credit being utilized. So just keep that in mind. Here's some tips. You can make a call and increase your credit limit to prevent exceeding that 25%. You can also spread your spending over a couple of cards, or just pay the bill before the statement ending date. One caution here, though, I don't want you to go out and use your card and pay it down to 0 before the statement ending date every single time, because what that does is, when you are reporting to the agencies, it appears that you are never using your cards. And while you would think that that's a good thing, credit agencies want to see you using your credit. So if you do have a pattern like that and you want to pay it off, just pay it mostly off, not all the way off, okay? Now, duration of credit history is 15% of your score. So I want you to be very, very cautious about closing any lines of credit. It's better to pay it off and keep it open. So even if you're mad at them, just pay it off and keep it open. Don't close it, because it only hurts you. It doesn't really hurt them. So use that credit card periodically on small purchases. What I usually tell my clients is to use it on gas in the car, groceries for your family. Those are things that you're going to buy anyway, and just turn around and pay it down at the end of the month, okay? Now, closing it will wipe out the entire history that was built up. And this is super critical for those of you with thin credit histories or young people just getting started. If you're just getting started, please don't close any of your credit lines, okay? Now, types of credit, combination of different types of credit is making up 10% of your score. So while this might be counterintuitive, it is super important that you have at least 2 to 3 major credit cards. I know that you think that that having more credit cards is actually a negative impact, but it's not true. It's a positive impact. And I need you to be using those periodically. Don't have to use them every month, but every couple of months, just go charge gas on your car or groceries or something that you're already going to do. Please stay away from consumer finance cards. These are those department store credit cards like Rooms To Go or Best Buy. The reason we don't like those is because that your balance is always your high credit limit. So it always looks like you're having 100% of your credit utilized. And so as we know from previous slides, that's not a good thing. So we want to make sure that we stay away from those credit cards and those interest-free deals from those electronic or home furnishing stores. They do not help your credit, okay? A good mixture would be home loans, car loans, student loans, and credit cards, but I don't want you to go out and just get a loan so you can have a mix of credit. As long as you have 2 or 3 major credit cards and you are utilizing them every couple of months, you'll be fine, okay? Now, credit inquiries, they do make up 10% of your score, so please always be mindful of who checks your credit. There are opt-out pre-screen companies out there that will take you out of the pre-screens, and so that will help a little bit. Here's the good news, though. If you are shopping for mortgages or cars, most scoring models will only count 1 inquiry against you as long as you are making them within a 30-day period. So you could have, say, 10 credit inquiries, and it would only negatively impact your score 1 time. All right, guys, that is today's Mortgage Minute. I know it's a little bit longer than usual, but these credit basics are brought to you by the Family Mortgage team. If you found value in this, please like, comment, or share. And, you know, I'd love to hear from you if you have any questions. Thanks so much.